We're seeing here right now, though, that bad month, and then also ahead, we're expecting a rate hike. But you believe there's a possible bounce for the markets ahead. You're going to have to explain this thesis.
Absolutely. This repeated itself. Well, it's about to repeat, I think, what happened a couple of months ago. In March, we had the first rate hike and things had gone down, but then there was about a 10% relief rally. I think what we've got here is a situation where, particularly last week, things just got overcooked to the downside. Yes, we're going to have continued volatility all throughout the year, but I think we're going to have a little bit of a pop, assuming that the Fed doesn't do anything terribly surprising. But a 50 basis point rate hike, I think we'll see a little relief between now and then.
So, Lee, I got to follow up with you really quick. We are expecting a 50 basis point hike. Isn't that going to hit these technology stocks once again? And they're just such a big part of the market these days.
Yeah, I think they are a big part of the market. Some of the technology stocks might still be in for a bit more trouble. But candidly, things like Amazon, which got hammered mercilessly on Friday, I think was an overshoot. Companies like Microsoft, Apple, we're looking for the long term and working with everyday clients. It's a long-term picture, and we're not getting too bent out of shape about moving this from 1 month to the next.
All right, Gina, I want to come over to you. Lee's pointing out Amazon, but you're saying the market's searching for quality. I looked at that Amazon report. The market didn't like it, but there was really a lot of quality in there, a lot of cloud growth, a lot of marketing growth. I think we all kind of thought that the logistics business was going to slow down because people are just leaving their house. Isn't Amazon quality? Did I miss something?
I actually totally agree with you. Amazon is quality. I mean, if you look deeper into the numbers, the cloud story isn't going away, and you're seeing tremendous growth continuing in Amazon Web Services, which is a big piece of their long-term story. But we have also been expecting that, the e-commerce play at some point was going to unravel because the pandemic, as people started to get back out into the economy, there was going to be a natural pullback. But the interesting thing is that no one's going to stop ordering Amazon products. I think that's here to stay, and I think that we will see sort of Amazon settle where it's going to settle, and the market right now is looking for long-term quality and durability. So in the end, I think Amazon's going to have the last laugh.
So, Gina, one of the things that you flagged is with this rising interest rate situation, the market's just not going to tolerate what you call stupidly high valuations. So I look at a lot of these tech stocks, PayPal, for example, trading at 21 times forward earnings. Is that stupidly high for a business like this that we all know at some point, yeah, there's going to be paper money, but we're all going to pretty much tap, swipe, et cetera?
Absolutely. Some of these companies are actually really attractive right now. And they're companies, by the way, that aren't necessarily as cheap as PayPal, but like NVIDIA is actually cheap relative to what you can expect. And the semiconductor market is not going away. And those chips are highly valuable, and where they're going is incredibly important. So, I think that you can tell stories about this kind of durability, but valuation matters, and we're starting to see some companies really become more and more attractive. Right. I think until we get through the rate hikes and we know what's happening, that's when we're going to know how to value things. Right. But right now, I think the market's just looking for two things: profitability, cash flow.
All right, before we let you guys go, we want to play a soundbite from Scott Minerd, his take on inflation. I just want to get your reaction to it before we let you guys go.
Because the Fed has been so accommodative, we've had to readjust the price level to a higher level. We're never going to take that back. We are now permanently at a higher price level. Yeah. So trying to think that we're going to somehow reverse all of this and go back to where we were, it is not going to happen.
All right, Lee, turn it over to you. Agree or disagree, just really quickly, and how do you see that impact in the markets going forward?
I'd say basically I agree. We've had some very unusual circumstances that we've come through. The Fed has made certain adjustments. Overall, from an inflation standpoint, I think things are going to settle somewhat, but in terms of pricing, I basically agree with him.
Gina, over to you.
I agree, but I think that he is underestimating the incredibly powerful impact, deflationary impact that continued technology happens. I mean, I think we're going to have to figure out how to get productivity in this work from home environment. A lot of people are saying productivity is falling as people are working from home and being distracted. And so that may not work in the short term, but I think in the long term, that it's going to settle. We are permanently higher, but tech is deflationary.